Hello friends, welcome to the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. Thank you so much for being here. It is another great day for crypto. Today I've got a really fun word of the day for you. Then we're going to look at a market overview. We're going to talk about a massive XRP move. We're going to talk about, should we buy the dip, or should we move to stable coins, or should we just get out of the market altogether? People have been asking that question. I want to address that quickly. Also, we're going to look at the Fastswap DEX, another DEX that's making some moves. We're going to look at possible reasons for this recent dip. We're going to look at a Cardano upgrade. We're going to talk about how Swiss bank is supporting crypto. More good news for mass adoption. We're going to talk about a coin highlight, and then we're going to move on to something that's happening with the Brave browser, and I want to make sure you guys know about that. So let's jump right in and look at the word of the day, which is ZEUGMA. Z-E-U-G-M-A. Now this might sound like some sort of character on some sort of game or something like that, or something strange, but actually what it is it's a noun. The noun ZEUGMA is a word which is used to modify or govern two or more words when it is appropriate to only one of them, or it is appropriate to each but in a different way. So it's a literary convention. An example would be, on his fishing trip, he caught 3 trout and a cold. The word caught being used to modify both trout and cold, but in different ways. Obviously one literally and one more metaphorically. The origin of ZEUGMA. The grammatical and rhetorical term ZEUGMA, the use of a word to modify or govern 2 or more words when it is appropriate to only one of them, is a favorite of grammar enthusiasts, if of no one else. ZEUGMA appears in Old English, spelled Z-E-U-M-A, a medieval Latin spelling, in the Enchiridion Handbook, a scientific and mathematical textbook by the Anglo-Saxon scholar Berthfirth of Ramsey. Berthfirth only defines ZEUGMA and translated into Old English Geifig, a joining. ZEUGMA next appears 3 times in an anonymous Middle English grammatical treatise from the mid-15th century. The author defines ZEUGMA and gives easy examples in Latin. ZEUGMA comes via Latin zeugma, from Greek zeugma, something used for joining, a yoking, a bond. ZEUGMA, a derivative of the verb zeugnai, to yoke, bind, fast. That is the word of the day for us for this February 25th, ZEUGMA. So, he caught 3 trout and a cold. Interesting word. I like it. All right, let's move on to the market cap. Look at prices today. What is happening here? Now, Bitcoin is up 3.3% in the last 24 hours. It is now $51,265. Bitcoin is actually looking good. We see that it's stabilized for a bit. It had dropped down below the 50,000 mark, and then it came back up, and now it's stabilized a little bit and is starting to inch its way back up 24% in the last 24 hours. Now it's still down 2% for the last 7 days, but we're moving in the right direction, so that is good to see. Ethereum is struggling a bit. Ethereum is currently $1,643. It is down over the last 7 days 11%. No change in the last 24 hours. Binance Coin had an incredible week, up 57%, up 3.2% in the last 24 hours. It is at $257.52. Moving on to number 5, Cardano. Cardano was up 20% this week, up 5% in the last 24 hours, currently at $1.07. Cardano's looking pretty good at the moment. Now, Polkadot was up 8.2% this week, but has not moved over the last 24 hours, holding steady at $34.62. XRP is down 12% for the last 7 days, but up 1.5% in the last 24 hours. It is currently at 47 cents. And this is our major story of the day. XRP is in the news again. A cryptocurrency tracking bot, Whale Alert, has spread the word that in the past 20 hours, a mammoth 255 million, that's right, 255 million XRP tokens have been transferred by 2 crypto exchanges, the US-based crypto trading giant Coinbase and by Bybit. According to data on transactions published by popular crypto tracker Whale Alert, in the last 20 hours, Coinbase and Bybit trading platforms have transferred a staggering amount of XRP, 250 million tokens. Coinbase transferred a whopping 200 million XRP, while Bybit performed 2 transactions, sending a total of 55 million to the Huobi and Binance crypto trading giants. The total amount is equal to $119 million in US fiat currency. Wow. It's an incredible amount, $119 million. San Francisco-based Coinbase is among multiple exchanges that suspended XRP trading in January after the U.S. security regulator initiated a lawsuit against Ripple and 2 of its CEOs over allegedly selling unregistered securities, the XRP coin. Still, Coinbase continues moving massive amounts of XRP. Besides, its customers are still able to hold their XRP tokens in Coinbase wallets and can withdraw them seamlessly. So this might mean that we might see quite of a dump for Coinbase. I mean, if Coinbase is moving XRP to other exchanges, you can only imagine that the reason for that would be for them to unload them. So might not be good news for XRP, and we continue to see XRP being pushed downward in the total market capitalization in its ranking, currently at number 7. Litecoin is at number 8, up 10% in the last 24 hours. Got a little bit of a boost. It is still down 15% for the last 7 days, however, currently at $200.22. Chainlink is $28. Right now, it is up 3.2% in the last 24 hours. Bitcoin Cash rounds up the top 10 at number 10. It is $544.90, up 2.7% in the last 24 hours. Looking good. Some other coins that are doing well are Uniswap. Uniswap is up close to 20% for the last 7 days. Dogecoin is up 12%. However, it is dropping currently. It is down 6.7% in the last 24 hours at 0.05 cents. We've got, take a look at winners and losers. Let's see what we have going on in the last 24 hours. One of the top winners, the number 1 winner for the last 24 hours, is Phantom. Now, Phantom is a platform. It is similar to Ethereum, Cardano, Polkadot, etc. It has been killing it, and this is not necessarily a surprise. I've talked about Phantom, I think 2-3 weeks ago, and recommended that people take a look at it. It is up 362.7% this last week, 31% increase in the last 24 hours. It is now currently 77 cents. Engine Coin doing quite well in the last 24 hours. Now, if we recall, Engine Coin was the first crypto to receive regulatory approval from the Japanese government to provide in-game assets, the buying and selling of in-game assets, things like NFTs. So Engine Coin might be one to watch. It hasn't been doing incredibly well over the last month during the bull market, maybe not as much as would have been expected, but it is seeing a bit of a boost right now at 29%, and those are the winners. Now, when it comes to losers, we've got top 3 round up with 53% negative for ZK IOST is down 11%, and Dogecoin is down 6.7%, and that will cover the market wrap for the day. All right, people have been talking a lot on social media, and clients have been asking me, what do I do? Is this bull run over? Are we now moving into a sideways movement, or are we going to continue to drop down? What should I do? Should I get out? Should I sell? Should I put my crypto into stable coins to preserve my earnings? Obviously, one of the most common things that you will hear people say often is they will give the advice to make sure that you capture some of your profits. So if you have seen a nice increase, capture some of your profits. And the thing is that that's not going to hurt in the long run. If you've earned a profit and you're taking your profit, great. However, those same people, when pushed a little bit harder, will often admit that they have regretted doing that because they lost much greater potential earnings if they had just by selling than if they had just held, right? And there's a couple of stories today that illustrate this concept. Now, I'm not giving financial advice. You do what you think is best and what's wise and what's smart. But what I'm simply saying is that when it comes to the cryptocurrency space, often people realize later on that they sold too early, or if they had just held, even if they had to hold and wait for another year or two or three or four, that they would have done much better than by trying to sell and pull some of those profits out. So it's just something to think about. Here is a story by the CEO and founder of the world's largest cryptocurrency exchange, Binance, Changpeng Zhao, who recently opened up and told about his initial Bitcoin purchases. He did this on Twitter. And this is what he said. Amidst the correction that sent MSTR stocks down, the CEO of MicroStrategy, passionate Bitcoin proponent Michael Saylor, shared the words of investment legend Peter Lynch, the author of One Up on Wall Street. The prominent fund manager dismissed investors that attempted to buy the dip amidst every correction markets that are going through, and said this: far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Mr. Saylor applied this wise motto to Bitcoin BTC, which is also trying to recover from a flash crash. Meanwhile, Mr. Lynch actually said these words far before the massive adoption of the crypto king occurred. At the same time, Binance's Changpeng Zhao decided to illustrate the veracity of Lynch's rule. He unveiled that he purchased his first Bitcoins, BTC, 7 years ago at $400 per coin. Since 2014, he never sold his digital gold. CZ is satisfied by the results of his Bitcoin BTC strategy, as he is doing just fine so far. Quote, this is what his statement: doing just fine, doing fine so far. Time to zoom out. CZ admitted that after his purchase, Bitcoin went down to $200, so he lost 50%, right, of his initial investment, and stayed around this level for many months. Therefore, he recommends that all traders zoom out the time frames for analyzing the Bitcoin price. And when you think about that, so he purchased it at $400, he lost half of that, and probably is thinking like, this is not good. Panic time, right? However, look at where we're at today. Now, every single that $400 Bitcoin that he bought is now at $51,000, right? So, as covered by you today previously, Changpeng Zhao was among the first supporters of the laser eyes flash mob. Oh, and then they just go on to talk about the laser eyes flash mob thing that was going on with Twitter, where people were putting these laser icons on their eyes just to kind of symbolize their affinity to Bitcoin, and saying we're going to continue to do this until Bitcoin hits $100,000. So, which is kind of one of those fun meme things that was happening on Twitter. Here's another story though that illustrates what I'm talking about. People, according to Cointelegraph.com, people who bought Bitcoin in 2017 are becoming the strongest hodlers. This new data shows. Investors who began their Bitcoin journey 3 to 5 years ago have stronger hands than you might think. Now, these are the people that bought at the high of 2015, close to $20,000, and then saw the market drop down to lows closer to $3,000. Not fun, obviously, for them, but they've learned, and they're continuing. The data is showing that these people are continuing to hold. According to Unchained's HODL Waves chart, which ranks the supply according to WinCoin's last move, those who bought 3 to 5 years ago are sitting on their investments. Since the cross-asset crash of March 2020, when BTC USD fell to lows of $3,600, and I think that was meant to say March 2017, the percentage of the BTC supply that last moved between February 2016 and February 2018 increased from 5.57 to 13.38%. In other words, the uptrend in price during 2019, much of 2020, and all of 2021 has not made 2017 bull run investors sell after surviving the multi-year bear market. By contrast, the 5 to 7 year and 7 to 10 year HODL crowd has been reducing its presence over the past year. At the beginning of January, 59% of all Bitcoins in the network were sitting for longer than 1 year without moving, and by the end of the month, that number dipped to 57%, a decrease of 2%, or around roughly 372,320 Bitcoin. Unchained wrote in an update earlier this month, it appears that most of the Bitcoin transacted during January was Bitcoin sitting for less than 3 years, as the Bitcoin resting for 3 to 5 years actually increased by 0.8%, totally unperturbed by the price volatility. These are the folks that have been holding ever since the last price spike of $15,000 in January 2018, or from $431 in January of 2016. And 10-year veterans are holding tight as well. And I won't continue with the rest of the story, but basically it's simply illustrating that many people recognize that holding is the best strategy. And even when they got burned during the 2017 crash, they've continued to hold. And obviously now when they saw that price point come to parity and match where they bought in at, they did not sell. They continued to hold and to continue to wait, and that has been a very good thing for them. It has boded them well, as they have obviously seen, whether they bought at $15,000 or $20,000, now they're at $51,000 and still holding, apparently, which just sort of illustrates that the vast majority of people within the cryptocurrency space have a deep-seated belief that we are going to go much, much, much higher, and so they are holding, they are hodling. Moving on to our next story of the day. Fastswap. Now, we've been talking a bit over the last week about the Ethereum gas prices and the problem that that is creating for Uniswap and just in general for smart contract interaction with the chain. Well, here is an example. I've been talking also about how a number of projects are moving towards being platform agnostic, and what that means is they don't rely or work only with Ethereum, but they will move to other alternatives as well, like the Binance Smart Chain, like Cardano, like Polkadot, some of these others, Avalanche, Phantom, etc. Fastswap is an example of this. It is a decentralized exchange for ERC20 tokens, and it is set to release a liquidity aggregator with version 2.0 update on February 28th. The update follows the successful launch of Fastswap version 1 and version 1.5 that went live in January of 2021. The latest update will bring additional liquidity pools, staking, and UI/UX improvements to the decentralized exchange. It will also usher in technical improvements to the DEX. Fastswap is set to integrate Binance Smart Chain. BSC migration of its platform is launching in the second week of March 2021. Users will be able to swap, add liquidity, stake, and farm on the Binance Smart Chain. And that's not all. If we pull up the Fastsmart website at fastswap.exchange, we can see that they say Fastswap is a decentralized protocol for automated liquidity provision on Ethereum, Tron Network, BSC, etc., and cross-chain swap through parachain on Polkadot. So Fastswap this is very smart. This looks very good and positive to me that they are working to do this. And I've been thinking about and talking about for some time, will Uniswap do this? Will Uniswap not just be solely for ERC20 tokens for the Ethereum network, but will they also pick up and work with Binance Smart Chain and Tron and Cardano and Polkadot and all the others? If they do that, then I think we will see the price of Uniswap and the utility of it just explode and skyrocket. And Fastswap, this is what Fastswap is doing. So Fastswap might be one to keep an eye on. Now, I did play around with the protocol for a little bit, and it looks like currently they have liquidity problems. So you may or may not be able to actually use them at the moment when trying to make a swap, when trying to trade one coin for another. And that is something that hopefully gets resolved for them. But I simply wanted to talk about that story a little bit more, just to illustrate the direction that things could potentially be going as we see this platform war continue to develop, as fees become an issue, that other options are going to develop, and these problems are going to be solved and are going to be worked through and resolved. Now, here's a reason why we may have seen this recent dip. Of course, everyone's speculating, what could it be? What caused that? Is it just a normal market cycle? Is it what? Well, it could be that there was confusion over a $1 billion whale transfer, which might have triggered this. According to on-chain analyst Willy Woo. On-chain analyst Willy Woo says the recent Bitcoin sell-off may be due to false data, actually, surrounding a $1 billion whale transfer. In a new interview on the What Bitcoin Did channel, Wu says misguided fear over a whale dumping their 1.5 billion worth of Bitcoin may have been the catalyst that started the massive Bitcoin sell-off earlier this month. After speaking with Glassnode CTO Raphael Schultz-Kraft, Wu says it appears that incorrect data on the movements of a massive BTC trove made it look like a Bitcoin whale was moving their crypto to the exchange Gemini, where it could then be sold on the open market. But in reality, the movement was simply an internal transfer of Gemini funds. There was some mislabeling that happened, and so then when the whale transfer service picked up that movement, everyone thought that this whale was about to dump, and then that just sort of creates this spiraling domino effect as people figure, well, this signals it's time to sell. Now, Jim Cramer has come up with a good idea. He wants GameStop to invest $2 billion in BTC and become a Bitcoin store. I like it. I love it. You can go in, you can swap your games, you can trade, and you can buy some Bitcoin. Yeah, good idea. I just thought that was funny and wanted to mention it. We've got some updates on Cardano. Good news for Cardano. Cardano has announced that they are actually finally ready to activate Mary, and this will happen at the beginning of the month. According to the latest Twitter post by IOHK, its team has finally confirmed the first day of spring as the date of the Mary hard fork mainnet activation. The update will go live on Epic 251 at 21:45:51 UTC. We're on. We can today confirm that the Mary Cardano Protocol update is now confirmed for March 1st. This is good. So this is another rollout of the Gogan Epic. We will be seeing the launch of native tokens and making one more step toward smart contract sidechains and native tokens being available on the Cardano platform. As the update will be activated by the hard fork combinator, no chain split is expected in Cardano. Previously, Mary was deployed to public testnet. Now it is up and running in the testing environment for 3 weeks. The Mary update introduces native Cardano ADA-based tokens. As covered by U.Today, previously some ADA staking operators have already tested operations with ADA native tokens. With the token builder function expected to come with Mary update, everyone will be able to mint their own Cardano-based tokens. Thus, the most popular Ethereum killer finally becomes a multi-asset network. Good things for Cardano. Now, we've got some more signs of mass adoption, and this story is coming out of Switzerland. A Swedish bank, 177-year-old Swedish private bank. Sorry, I don't know where Swedish came from. I'm making up words this morning. To support cryptocurrency trading. A 177-year-old Swiss private bank, Bordier and SCMA, is incorporating Signum Bank's B2B banking platform to extend its offerings and include cryptocurrencies. Fantastic. More regulated channels of buying Bitcoin and cryptocurrencies. As a result of this integration, their clients can now, in a regulated environment, buy digital assets like Bitcoin and Ethereum. They will simultaneously diversify using Signum's digital asset management products. Today's coin highlight. Moving on to today's coin highlight, DEXTF. DEXTF is a platform for decentralized traded funds. You can sort of think of these as mutual funds. It's a revolutionary on-chain non-custodial asset management protocol. Here's how it works. DEXTF is a blockchain protocol to connect peer-to-peer investors and portfolio managers. It enables digital native funds where two parties, which are mutually distrusting, can cryptographically verify the status of the funds and enforce their rights directly through a digital wallet. So it's an interesting protocol, and what it allows you to do is you can go in and you can be a fund manager, and you can set up essentially a cryptocurrency-based, Ethereum token-based mutual fund where you select the assets that you want to include in the fund, and then you select the weighting of those assets. You say, I want to have Bancor, and I want to have Matic, and I want to have, you know, whatever, Uniswap, and I want to have UMA, and you put these 4, and then you say I want 20% of this one, 20% of that one, 20%, you know, totaling equaling 100% allocation across the tokens, and then you can you can say this is aggressive or this is not, you know, this is, and you can set up these funds, and then you can trade these funds, and you can make them available for other investors to trade as well, and it's all wrapped up into a DEXTF token, right? And then these tokens can be, you can do arbitrage with these things, because there will be a difference in the price of that mutual fund token, essentially fund token, on the DEXTF platform and versus what is on Uniswap. It's just all kinds of things. It's actually pretty complicated to get into, but also really cool, and sort of bringing a lot of the traditional finance world type of fund type of thing that can happen to cryptocurrency. And so this is one to keep an eye on. This is a project that could explode, I believe. I will be keeping an eye on it more and digging deeper into this, into how it works and what potential pitfalls might be. But as far as I can tell so far, it looks really, really interesting, because it's non-custodial, and it's a way that you can set up funds and then share those funds, and it's got a lot there. And I'll bring more to you about that in the future. If you want to follow these guys, you can do that on Twitter. The handle is at DEXTF Protocol. DEXTF Protocol. And you can check out that token on CoinGecko. It is currently $1.91. It has a circulating supply of 14,400,000. It has a max supply of 100,000. So the coin economics look pretty good. It is an Ethereum token, so that is something to keep in mind. And if we look at the chart over the last 24 hours, it's been hovering around $1.65 to $1.89. But if we look at the 1-year chart, it follows the market. We can see the price hit an all-time high close to $3.16 back on February 21st. Has now dropped down to $1.73 and is starting to climb again. So this might be a decent time to pick up some of that token if it's something that you decide is interesting to you. Yeah, I would look into that one a little bit more. DEXTF. Okay, moving on to the last story of the day. If you are not already familiar with the Brave browser, you should be. It's a phenomenal browser. And it allows for, it is a cryptocurrency friendly browser for sure. And it allows for you to receive basic attention token for viewing ads, and for you then to support content creators by giving them donations in basic attention token, which is great. So the idea is sort of to, instead of having the Google, ad platform network where you see those ads everywhere, regardless of whether you want to or not, and where the content creators who try to monetize with that ad system don't actually earn very much, Brave and Basic Attention Token have created a system that allows you as a user to decide whether you want to see the ads or not, and then when you do, to get paid for that, and then for the content creators to also get paid for their content, and to remove the middleman, essentially, is the idea. And it's a good idea. So the Brave browser, it is 3 times faster than Chrome. It provides better privacy by default than Firefox, and uses 35% less battery on mobile. We all know what's wrong. As a user, access to your web activity and data is sold to the highest bidder. Internet giants grow rich while publishers go out of business, and the entire system is rife with ad fraud. That's what I was talking about. So they're saying with Brave, you can take back control. Brave shields for privacy. They have a very good built-in privacy shield. Block data grabbing ads and trackers. The vast bulk of websites and ads include software that tries to identify you. They want to track your every move across the web. Brave blocks all of this, allowing you to browse freely. Block those harmful ads and trackers. It means a faster internet. You can also browse with Tor, which will bring even more privacy. Other browsers claim to have a private mode, but this only hides your history from other users using your browser. Brave lets you use Tor right in a tab. Tor not only hides your history, it masks your location from the sites you visit by routing your browsing through several servers before it reaches your destination. These connections are encrypted to increase anonymity. All right? You can browse without fear of censorship from outside influences. Now here's the rewards platform. Earn rewards and support content creators. Brave rewards. Earn frequent flyer-like tokens just for browsing. Turn on Brave rewards to earn frequent flyer-like tokens for viewing privacy-respecting ads. You can set the number of ads you see per hour. Currently, you can support your favorite web creators with your tokens, but soon you'll be able to spend tokens on premium content, gift cards, and more. That's the Brave browser. Check it out. I think you'll like it, but here's where I really wanted to go with this today. Brave is now talking about implementing a DEX. Little history on the basic attention token. BAT is one of the most widely utilized tokens, with over 1 million verified publishers accepting basic attention token from Brave rewards users. The April 2019 introduction of Brave ads delivered on the promise of BAT rewards for user attention and has grown to serve 2.5K ad campaigns from over 400 advertisers in 190 plus countries. BAT utility has expanded beyond Brave rewards, with BAT among the first assets supported as collateral by MakerDAO, Compound, and other leading DeFi protocols. Capitalizing on our user base and the success we have had with BAT adoption, we intend to make crypto and decentralized finance accessible and usable for everyone through the following efforts. Here's the upcoming news. Brave Wallet, the foundation for mass adoption and use of crypto and DeFi, will be the Brave Wallet, which will unify Brave rewards, custodial accounts, and best-in-class non-custodial, i.e. the user owns their private key, best stored in a hardware device, accounts in Brave. Features of the upcoming Brave Wallet. This is part of their news release of the plans they have to implement over the next year. Features of the Brave Wallet will include a new native Ethereum wallet implementation, replacing the existing crypto wallets in Brave, redesign of the current user interface and user experience designed to reduce friction among accounts, mobile as well as desktop support, a Java and Ethereum provider API, custom experiences for DeFi and NFT use cases, options for buying crypto with fiat payment methods such as credit card, debit card, bank accounts, and smartphone wallets. Future aspirations for the Brave Wallet also include utilizing BAT earned through Brave rewards to pay transaction fees, support for integrated NFT redemption uses within Brave, and here's where it gets really interesting. They're talking about launching a DEX aggregator, DeFi for everyone. So I imagine a DEX aggregator would be something similar to 1inch. Brave will bring DeFi to everyone through a new decentralized exchange aggregator to enable token swaps with distinct advantages and added value for Brave basic attention users, including discounts when utilizing BAT for paying transaction fees, discounts for users that hold BAT balances in their wallet, multi-chain support with many assets and blockchains. So this could be incredible. I don't know if this is going to be integrated into the Brave browser or be a standalone application, but my guess would be that it will be similar to what you have currently within the Brave browser, which is a wallet, right? And you can, it's a tab. You can click on that tab and you can go and they have the Brave wallet, which is basically MetaMask, but wrapped up inside of the Brave browser. It is MetaMask. So now though they're talking about, and if this is integrated into the wallet, this could be huge because they already have this very large user base. And I think this could be big for Brave, and it could also be big for adoption of cryptocurrency. And it would be super exciting to have a browser, built-in browser-based decentralized exchange, but an aggregate is what they're talking about. So this would then, and also they're talking about being chain agnostic, so supporting all the different chains, supporting all the different decentralized exchanges out there, potentially aggregating those in like 1inch does, where you could actually, it will go out and find the best value, best trade price for you. It could pull it from Uniswap, or it could pull it from SushiSwap, or it could pull it from the Binance Smart Chain on PancakeSwap, or whatever. I mean, this could be really, really cool. So definitely want to keep an eye on this and see if this actually ends up happening. Well, friends, that is a wrap for today. Thank you so much for your time. As always, please be sure to visit blockthrasher.com and sign up for a membership there. We have a free and a paid membership option. Help support what we're doing here with the paid option and receive premium content just for the premium subscribers. And as always, thank you so much for your time. And remember, it is a great, great day to earn more crypto. Talk to you soon. See you tomorrow. Bye.